Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday, 29th of July, recording the video 7:35 p.m. Eastern Standard Time. I was expecting downwards movement for Tuesday's session. Price began with a little bit of upwards movement, which was allowed for, and after that it moved strongly lower. That's pretty much what was expected. We have a red candlestick for Tuesday's session. I'm still expecting it's extremely likely that the fourth wave correction has arrived, which might complete in a total 13 or 21 days. That would be confirmed if we see a new low below 1955.59. In the short term tomorrow, I expect a third wave to increase downward momentum. The target is now 1946 for that small third wave to end. Let's have a look at the charts. The main wave count is very bullish, and while price remains above this maroon trend line, which is a channel copied over from the weekly chart, and particularly above the lower of the aqua blue trend lines, which is drawn using a classic technical analysis approach, I will continue to assume that the S&P remains in a bull market, because it is. Only if this aqua blue trend line and then the maroon trend line is very clearly breached will the bearish wave count be the main wave count. At this stage, I'm seeing an intermediate degree impulse for intermediate wave 1, getting closer to the end. Within it, minor wave 3 was 2.618, the length of minor 1, and at 2218, minor wave 5 will reach equality in length with minor 3. Within this impulse, the third and fifth waves will both be long extensions. At this stage, within minor wave 5, we had the middle of its third wave beginning here, 1, 2, the middle of the third wave is over here, and the fourth wave correction within minute 3 is unfolding. It should be reasonably somewhat in proportion to its counterpart minuet wave 2, because that's what gives the wave count the right look. This one lasted exactly Fibonacci 34 days. I won't expect the fourth wave to be as time-consuming because it's going to be a more brief type of structure. This sideways moving second wave was shallow, close to the 0.382 Fibonacci ratio of the first wave, and it was a time-consuming sideways moving combination. So the fourth wave is more likely to be deeper, and it's more likely to be a zigzag or double zigzag kind of structure, and they tend to be more brief. So I'll be expecting it could end in either a Fibonacci 13 or possibly 21 days in total. So far it's only lasted 3, so at least another 2 weeks for it to unfold. It may find support at the upper of the double aqua blue trend lines. Every day in the text article there are clear instructions on exactly how to draw these trend lines. This last one was first tested a year ago. It's been repeatedly tested since then, and sometimes price is finding support a little bit above it. It may be tested again. That may be where the fourth wave comes to an end, which is reasonably close to the 0.618 Fibonacci ratio of minuet wave 3 at 1881.28. Minuet wave 4 may not move into wave 1 price territory below 1858.71. Let's have a look at how this is unfolding on the hourly chart with the end of the third wave up here. Actually, before we go there, keep drawing this channel around the third wave using Elliott's first technique from 1 to 3 and then a copy on 2. This fourth wave should break through support at the lower edge of that channel, and that might happen before we get price confirmation that the fourth wave is underway. If that does happen before we have price confirmation, it will increase my confidence in the main hourly wave count. Okay, let's have a look at this on the hourly chart where the third wave ends here. This point here, we have a first wave impulse with a nice fourth wave triangle and a second wave zigzag showing perfect alternation. The second wave did move higher, and it's now on the hourly chart looks like a fairly obvious three-wave structure. The subdivisions on the 5-minute chart are a little problematic. I may have that labelling wrong. Maybe it's a double zigzag, not a single zigzag. Either way, I think it's really likely now that it is over here, so I'm moving the invalidation point down. If the third wave has begun here, then at 1946, it would reach 1.618, the length of the first wave. Within the third wave, I expect we have one and a deep second wave correction for submicro 2 over here, and I'm expecting to see the middle of this third wave unfold to the downside tomorrow. So I'm expecting to see quite a strong increase in downward momentum if this wave count is right, if my labelling of the second wave correction is over here is correct. Within the middle of the third wave, no second wave correction may move beyond the start of its first wave above 1981.37. I've drawn a base channel around microwaves 1 and 2. For the alternate hourly wave count, the channel is drawn in exactly the same way. There it's termed a corrective channel. For this main wave count, the third wave should have the power to break through support at the lower edge of this channel, which might provide initial support for a little correction along the way down, and then downward movement should break through that channel. Once it's done that, it should remain below the channel. Let's have a look at the alternate hourly wave count. It's all exactly the same to this point here, and then instead of the fifth wave possibly being over here as a short, brief fifth wave following a barrier triangle, this could just be the first wave within an extending fifth wave following a barrier triangle. So if this is microwave 1, then microwave 2 is most likely incomplete. A and B are seen in exactly the same way as the main wave count sees 1, 2. Because 1, 2, 3 and A, B, C have exactly the same subdivisions. In this instance, the downward channel is also drawn in exactly the same way. Here it's correctly termed a corrective channel, and in this instance, submicrowave C would be expected to find very strong support at the lower edge of this channel, which could also coincide with the lower edge of the orange channel copied over from the daily chart. I would not expect an overshoot of this blue trend line or this orange trend line for this alternate wave count. At 1961, microwave C would reach equality in length with microwave A, and that would see, submicro C would reach equality with submicro A, and that would see microwave 2 zigzag complete. 2 can't move beyond the start of 1 below 1955.59. Within the middle of submicro C, it's within its third wave. No second wave correction may move beyond the start of its first wave. So the short-term invalidation point is exactly the same, the channel is exactly the same, the structure is exactly the same. For both, the structure is incomplete. Downwards movement is expected tomorrow. The strength of downward movement is for the main wave count expected to be a lot stronger and should break through this trend line. For the alternate, this is the point which differentiates the wave counts tomorrow. Downward movement should not break below this trend line for the alternate. At the daily chart level, this is the bearish wave count. The subdivisions within the impulse of primary wave C are seen in exactly the same way as the subdivisions within intermediate wave 1 for the bull wave count. So the invalidation point is the same, the target is the same. We're still expecting a fourth wave correction counterpart to this second wave. It's all exactly the same, and it won't diverge probably for months yet. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.